Good morning, students. Welcome back. So we are discussing about this provisions, contingent liabilities and contingent assets. That's AS29. In the previous session, we touched upon some of the requirements related to this topic, right? So today we plan to wind up this. Yeah. We'll also practice some questions on this. Okay. Now, before we get on to our discussion and before we pick up some questions around this, let's do a quick recap. Now, as regards provisions, there are a few aspects we discussed about it. And we also compared provisions with the liability. So can you help me understand what is a liability and what is a provision? And how is provision different from a liability? Let's do a quick recap. Okay. Yes, over to you. So what is a provision? What is a liability? How are these two different? Over to you. Quickly. Yes. What are these two? What do you understand about this? All right. So Minu says obligation which is occurring from the past events. That's what you call as a liability. Okay. Neeraj says provision is a probable obligation that can occur in future. Okay. Then Radhesham says provisions are to be made when there is a probability. Okay. I think Anil is differentiating between these two. Anil says provision is probable whereas liability is definite. Adil says result in outflow. Can you please elaborate on this, Adil? Shamli says liability means the present obligation which has resulted from the past events, plus it involves an outflow of resources. Right? Okay, good. Now, provision is probable obligation arising from past event. This is what Shamli has added. Okay, now Radhesham says liability is a present obligation arising from past result, which leads to the outflow of economic resources. Okay, good. See, there are few points we have discussed. I can see a lot of other responses also coming up. One, if there is an obligation which will result into an outflow of resources, and why do we have that obligation? That is arising because of the past events. Yeah, any past event could be there, which is resulting into that. That's what you call as a liability. Now, for the provision, we can say provision is also a kind of liability only. Okay. But what is the difference between a provision and a liability? See, when it comes to a liability, in case of liability, there is no uncertainty in terms of the obligation. Now, in terms of obligation, we can say as regards the amount involved, as regards the timing, it's all clear, it's all certain when it comes to a liability. But when it comes to a provision, you can say obligation will be there, but it can be measured only by using substantial degree of estimation. Okay, some sort of estimation is required. Why? Because uncertainty is involved. Yes or no? Yeah. So we can say when there is some uncertainty as regards the timing and the amount or the amount, that's what you call as a provision as against a liability. And it is important to understand the difference between these two. Why? Because till the time we don't have a clarity in terms of what is a provision, what is a liability, and how are these two different, we may not be able to get on to some of the requirements, okay, which becomes important, right? Okay, so now what we can do is we can just pick up some small questions wherein we'll try to understand with the help of examples how is this obligating in my event going to impact, okay, and as around the practical application of these past events, outflow, okay, or well, let's suppose when we talk about the obligating event means what is that obligation that is going to arise, which you call as present obligation. Yeah, all right. Moving further, let's look at this small example. Okay, X Limited sells refrigerators with a warranty of 6 months. Refrigerators would be repaired free of cost by X Limited if some problem arises during the next 6 months of sale. See, when the refrigerators are sold, many a times when we buy something, so what do we get? We get some products wherein the warranty is given by the seller. Now, if you look at it from the perspective of the seller, there's a period during which any of the customer can come up, may ask for some repair, may ask for some replacement of the products, or maybe the replacement of the parts within that product. Correct? Yes or no? Now, in this case, if you look at the seller, the moment there is a sale, now this is important, the moment there is a sale, what has happened? An obligation has arisen on the part of the seller. In relation to what? In relation to the cost which the seller may have to incur. If some defect arises, okay, but the question is, does the seller know today how many customers are going to turn up for this repair? Tell me, do you think it's possible for the seller to know about it? Adil says no, Meenu says no. Okay, let's suppose the number of the customers who are going to turn up is not known. Let's suppose within the next 6 months, can the seller or would the seller know that when is the customer going to come up next month, second month, third month, 4 month? Do you think so? Do you think so? The answer is no. Lakshita, Pooja, they are saying no. Which means that in relation to this obligation, some uncertainty is involved. And what is that uncertainty? That uncertainty is in relation to the amount. Okay. That uncertainty is in relation to the amount as well as the timing. Yes or no? Right? So that's why, what do you call it as? You call it as a provision. So therefore, we can't call it as a liability. Understood? Yeah. Generally, when we use these terms interchangeably, so you'll now be able to appreciate what is wrong in that. Yes or no? Yeah. Okay, so let's look at one more example. That Limited takes a building on lease for 10 years. Okay, lease means the rental contract. That's the lease, right? Now, terms of the contract provide that Z Limited must vacate the building in its original condition. Generally, when you go take any asset on lease, it's a very common condition which is attached in the lease arrangement, that the manner or the condition in which the asset is given by the lessor to the lessee, in the same condition it is expected to be returned. Okay, very commonly it is found in the contracts. Now, in this case, Z expects what? Z expects that there is a likely cost of 10 lakhs to be spent at the end of 10 years for restoration. Since there is a present obligation on X Limited at the time of entering into the lease contract. Now, this should not be X Limited. I think it's a typing problem. Okay, so it should be Z Limited. A provision to the extent of present value of this amount should be created. Now, what does it mean? Now, let's try to understand this with the help of an example. Okay. So let's suppose today Z Limited has entered into a contract. Right? And the contract period is what? 10 years. Today Z Limited has entered into a contract. Let's suppose some premises building is taken on lease. Okay, now what does it require? After 10 years, when Z Limited will vacate the building, it should be in the same condition, original condition. Okay. Now let's suppose for the purposes of its usage. Okay, yeah. For the purposes of its usage, what Z Limited has done is, Anil, I'll come to your query. Yeah. What Z Limited has done is, Z Limited has done some installation on the building, say furniture and fixtures. Okay. Yeah. Some infrastructure has been set up on this building. Now, at the end of 10 years, what will happen? When this building will be vacated, Z Limited will be required to uninstall this. Yes or no? What do you think? Tell me. Z Limited would be required to uninstall this. Yes. Now, when that is required to be uninstalled, you can say sort of decommission. Okay. What do you call it as? Restoration. Means Z Limited will be required to restore the building in its original condition. At that point of time, Do you think some cost will have to be incurred by Z Limited? Some money will be spent on that process? Navneet says yes. Meenu says yes. Now, in this case, let's suppose it is expected that Z Limited will be required to spend, say, rupees 50 lakhs. So that's the money will Z Limited will have to spend, right? Now, as regards this 50 lakhs, when will this be required to be paid? After 10 years. So this money is not required to be paid today. We are not talking about lease amount. See, lease is something which will be paid each year. So we are not talking about lease amount. We are talking about a cost of restoration, cost of decommissioning, correct? So what do you call this cost as? Let me just call it as restoration cost. Restoration cost. So this will have to be paid. Now, when this restoration cost will have to be paid after 10 years, we must understand the fact that even though its payment is going to happen after 10 years, when is this cost incurred by the company? Can you think about it? When do you think this cost is incurred by the company? I'm not talking about the payment. I'm talking about the incurrence of the cost. Meenu says during 10 years. Neeraj says after 10 years. Quickly, when do you think this cost is incurred by the company? Hina says after 10 years. Teyosumi says after 10 years. No, this cost is not incurred. See, its payment is going to happen after 10 years. Please understand. What do you mean by incurring the cost? Means when is this cost accrued? Yes or no? See, there is a difference between accrual basis and cash basis. We all understand that? Yeah. And which basis of accounting do we follow? Cash basis or accrual basis? Accrual basis. That's what Navneet says. Now, in this case, let me just reframe the question. When do you think this cost is accrued? At the end of 10 years or today? When do you think this cost is accrued? Shamli says today. Navneet says today. Yes or no? So that is what you call as incurrence of cost. Yeah. When you say this cost is accrued today, so what does it mean? You have incurred the cost today. Correct? And that's why in this case, what should you do? Should you recognize this cost after 10 years or today? Tell me, should you recognize this cost after 10 years or today? Very good. Neeraj, Shamli, Meenu, they are saying it should be recognized today. Pavan has the same answer. Prerna, Aditya, they have the same answer. Hina, Harivansh, very good. Now comes the problem. Okay. The moment you say this cost is required to be recognized today, now comes the problem. So let's understand the problem that we have. There is a concept called as present value and future value. Are you aware of that? We also talked about it. What is future value? What is present value? Now in this case, 50 lakhs is the amount that will be paid after 10 years. So is it present value or future value? Clearly future value. Because what have we estimated? We have estimated that after 10 years, what will be the amount that the company will have to pay for this restoration? Yes or no? Yes or no? But when are we required to recognize this cost? That is today. We are required to recognize this cost today. So can we recognize the cost today? Can we pass an accounting entry today at a future value? What do you think? No. If we do that, that will be wrong. So that's why in this scenario, what is required to be done? We will have to compute its present value. Yes or no? Its present value will have to be computed. Correct? Yeah. So we will be required to compute its present value. And at the present value, we will have to record this. Okay. Clear on this? Everyone clear? Any questions, any doubts if you have so far, please let me know. Over to you. Any questions, any doubts? No? Everyone clear? Vijay clear? Harivansh, Navneet, they are also clear. Pavan is also clear. Very good. See, in fact, this topic is such. Okay, it has got some small concepts which are quite relevant, which are quite important, but generally you will find them to be quite simple. Okay, all right. So now let's look at some more examples. Okay, to discuss this further. We have discussed that there will be a present obligation resulting from past events, and that will also result in outflow of resources. So let's look at this example. Dell Limited sells laptops with a replacement warranty of 1 year. Okay. Neeraj, I'll come to your query. In fact, we can just pick up your query now. Neeraj, if you can just explain your query. Huh? Neeraj, over to you. Can you please explain your query? Please pick up. Yes, Neeraj, please go ahead. Please explain your query. That will be helpful for everyone. Yes, Neeraj, please pick up. Nisarg, if you can unmute Neeraj.
गुड मॉर्निंग सर।
Good morning, Neeraj.
सर अगर हम उसे आज प्रेजेंट वैल्यू पे रिकॉर्ड करते हैं और जब 10 साल बाद जब असलियत में जो कॉस्ट इनकर होगा तो जो डिफरेंस होगा वो लॉस रिकॉर्ड करेंगे क्या उसे?
नहीं, ऐसे नहीं होगा. So if you go back, there was a discussion around the present value that we have had. Okay. In that case, we discussed that once you record the amount by computing its present value. So what do? Let's suppose in the given example, its present value comes out to say rupees 26 lakhs. Okay, hypothetically, I'm saying this. Let's suppose what is the present value? 26 lakhs. Now, we understand that even though we are recording an amount at 26 lakhs today, it has to become 50 lakhs after 10 years. Only then you will be able to pay 50, otherwise you will not be able to 50. So that's why what do? Each year, at the end of each year, you will accrue interest on that, so that it gets back to 50, or you can say it proves up to 50 at the end of 10th year. And that interest will be the expense in the books of the company. Okay. So that's not really a loss, I would say. That's what you will call as an expense to be recognized over the period. Clear, Neeraj?
यस सर, ये इंटरेस्ट वाला नहीं पता था इसलिए डाउट आया।
No worries. That's good. I understand Anil has a question. Yes, Anil, please pick up. Yes, Anil. Anil, over to you. I understand Navneet, you have a question. Anil, Navneet, please pick up. Please explain your queries. Nizar, no, I think Anil, you'll have to raise hand first of all. Huh? I don't see you raising hand. See, when you raise hand, that's when the concerned person will unmute you. Nisarg, if you can unmute Anil.
Sir, like why we are not spreading over the lease term?
Sorry, I couldn't understand.
Like the present value of 50 lakh, why we are not spreading it over the lease life of 10 years?
No, so is that the question that is the question that why are we recognize this 26 lakhs today and why are we not amortizing this 26 lakhs? Is that the question?
Yes, sir. Why we are not amortizing?
See, if your question is that why are we recognizing this entire amount today and why not over a period of 10 years, that is because we have incurred the cost today. If let's suppose there's a cost that you incur today, so will you wait for the 10-year period? Answer is no. Let me just
No.
put it across in a very different manner. Okay. Say in the given example,
Okay, sir.
what is the arrangement? Z Limited will continue to use this building for next 10 years. Okay. So that's why what are you expecting?
Yeah.
After 10 years, there will be a restoration cost of 50 lakhs. Okay. But its present value is what? 26 lakhs. Okay. Now, let's suppose for some reason, Z Limited vacates the building after 6 months. Okay. Installation and all is done.
Yeah.
So in such a case,
Okay.
will this uninstallation be required after 6 months? Yes or no? Will that be required after 6 months? What do you think,
Yes, sir.
Anil? That
Yes,
will be
sir.
required. So in such a case, will you
Required.
be able to spread it over 10 years? Answer is no. Understood?
No, sir.
Why? Because we have incurred the cost today itself. The moment you do the installation, the cost is incurred. So that's why you will recognize this entire amount today. You will not wait for 10 years. Clear, Anil?
Okay, sir. Got it. Yes,
Yes.
sir. Thank you.
Sure. Okay, then I think Navneet, if you can just raise hand, explain your query. Okay.
Good morning, sir.
Good morning, Navneet.
Sir, actually, मतलब I have to tell this that Mr. नीरज कुमार asked ना that अगर जो हम today 26 lakhs पे record करते हैं and then if in future it will be 50 lakh, that is there any loss
Right,
or not?
right,
So,
right,
sir, I think if today's present value of 50 lakh in futures is 26 lakh
right.
and after 10 years अगर जो हम 50 lakhs का 26 lakh जो past में हमने रिकॉग्नाइज किया था,
Mm-hmm.
तो आफ्टर end of 10th year, if we'll calculate present value of 26 lakh, so it will also be 50 lakh, no?
Yes, using the same interest rate.
So
See, the
3%.
rate that you use for discounting, if you apply the same rate, so you'll eventually reach 50 lakhs.
Yeah, so this is a common sense, and there is no loss anytime, because अगर जो हम आज 50 lakh का present value today देख रहे हैं 26 lakh, and in future
Correct,
if you calculate present value of 26 lakh, it will be come to 50 lakh. Okay,
correct, correct. So actually it's not a loss, but it's an expense that you will
expense. Yes,
recognize over the period.
yes. Thank you.
Okay. Yes. Yes, Pranav, please go ahead. Please speak up. What is your query? Please explain your query. Pranav, over to you. Pranav, please explain your query quickly. Pranav, if you are around, please explain. Please raise a hand.
Hello. Good morning.
Pranav, I can't hear you. If you are around, I think there's some network issue. Your voice is breaking.
Hello.
Yes, Pranav.
Good morning.
Pranav, I think there's some network issue. Huh?
Hello.
I'm not able to hear you. No worries. If you can just elaborate maybe in terms of your query. Yeah. Okay. So see, I'll just read out your query. I'll just try to understand as to, what is it that you're trying to understand. So Pranav is asking whether it should be capitalized or not. So I think in terms of this liability that we recognize, he's saying what should be the corresponding impact in case of leased assets or capital assets. See, that's what you see in case of PPE. If you have covered PPE already, have you covered PPE? Everyone, please confirm. PPE, have you covered? Yeah, very good. So in case of PPE, if you remember, there's a cost component called as asset retirement obligation. Yes or no? Asset retirement obligation, there's a cost component. So when the company follows cost model in case of PPE, so what will happen? There are three cost components. So the third cost component is what? Asset retirement obligation. So the concept that we have just discussed over here is the same one. Yeah. In case of PPE, you discuss the debit side, or you discuss one impact which goes to the asset. In case of AS29, we are discussing its corresponding impact, means the corresponding liability that we recognize for that. Okay. Yeah. Now clear on this? Clear? Everyone clear? Any further questions on this? Any more questions? Any more doubts? Okay, Neeraj is also clear. Very good. All right, so let's pick up one more question. Kel Limited sells laptops with a, I think this is the one that we were about to pick. Okay, so let's look at this one. Kel Limited sells laptops with a replacement warranty of 1 year. If something happens to the laptop within 1 year of purchase, the company would replace the complete laptop. A few laptops during the past years have been replaced by Cal Limited. So this has also been a practice which Cal Limited has been doing. In the above situation, what would this company do? Cal Limited would incur some expenses to replace a laptop if something goes wrong. So therefore, what do you call it as? An outflow of resources. Okay. So this replacement of laptop if required, what is that? It's an outflow of resources. So by outflow of resources, we should not be thinking that there will be a cash payment. Understood? It could be any sort of outflow. Yeah. And why does this outflow take place? Or we can say, why do we have this obligation arising in respect of this company? That is because of past event. And what is that past event? Sale of laptop. So in this case, what is the past event? Sale of laptop. So the moment the laptop is sold, this obligation arises. Understood? Yeah. So we need to look at some of these features. You can say, huh? Okay, so every time there is a question, so you need to identify some of these things. Yeah, clear? Clear on this? All right, good. Navneet is clear. Great. So now let's look at one more example. Okay. So let's look at one more example now. AB Limited has received a notice from one of the customers about health issues from using the products of AB Limited. The customer in the notice claims damages of rupees 5 lakh. So you can say there is an uh, obligation which could be there. So we need to ascertain whether this obligation is there or not. Now we need to look at all of these terms. Okay, one by one. Adil, Radhesham, I'll come to your queries. Okay. See, in this case, what is the past event? Past event is the sale of goods. Correct. And what could be the outflow? 5 lakhs. Now the question arises, can this outflow be reliably measured? Answer is yes. That outflow can also be reliably measured. However, when an outflow will be probable or not cannot be confirmed. Okay. Now, important thing is what? We need to find out whether it is certain or probable. If let's suppose we can't do that, it's not possible. It cannot be confirmed. Why? Since the customer may or may not win the case because it's a litigation. Yes or no? Yeah. Customer has raised a claim and the company has not accepted the claim. Let's suppose there's a litigation going on. Now, what will be the outcome of the litigation? That's what we need to ascertain now. Yes, we need to find out what will be the outcome of the litigation. So in this case, if the outcome is not known today, if we are not clear whether the company will win or lose, so can you tell me what do we do? Any thoughts? Anyone? Can we recognize a provision? Can we recognize a liability? Minu says no. Forget about liability. See, liability we will recognize when there is absolute clarity. We cannot even recognize a provision. Why? Because it's not probable. Remember, probable, possible, remote, these are the terms we discussed. Correct? So in this case, what will happen? Company will only be required to give a disclosure in respect of what? Something that we discussed as a contingent liability. Okay. So it's not a footnote. No. It's a disclosure which will go into the notes to accounts. But you don't call it as a footnote. Huh? To call it as a footnote will be wrong. Okay. Clear? Now, I had few questions around this example number 5. Now, in this example number 5, can you tell me what do we do? Do we recognize a liability? Do we recognize a provision? Or do we disclose a contingent liability? I think this was the question. Yes, Anil, you have a question? Please go ahead. Please pick up. Anil, please pick up. Okay, Anil is saying he's clear. Shamli says, no. So I'm assuming the answer that you are giving is for example 5 now. Shamli, Harsh, they are saying it should be a provision for example 5. Can you tell me why a provision? Nagraja says disclose a contingent liability. Okay, what about others? See, in example 5, what do you do? Do you create a provision or do you disclose a contingent liability? Adil says contingent liability. Nagaraja says no provision. Gayatri says no provision, no contingent liability. So what do we do? Navneet says contingent liability. Okay, so I can see mixed responses. Tejaswini says no provision. Vikas says contingent liability. Anil says provision. Pawan says contingent liability. Gayatri is also talking about contingent liability. So some of you who are saying contingent liability, let's go one by one. Can you please explain why it's a contingent liability? Gayatri, Nagraj, Pavan, can you please explain why it's a contingent liability, Vikas? Why it's a contingent liability? Quickly, huh? Why do you think it should be a contingent liability and not a provision? Prerna says because it may occur or not. Okay. Adil says there's no probability. Yeah. And I think same is the response from Nagaraj. Okay. Now those who are saying it's a provision, can you please explain why it's a provision? Over to you. Those who believe it's a provision, can you tell me why it should be a provision? Quickly. Quickly, huh? Why it should be a provision? those who were saying that there will be a provision, can you please explain why there will be a provision? Why there will be a provision? Vikas says because here we are not estimating. Radhesham says because some laptops have been replaced in the past. Neeraj says because the entity has replaced the laptop in the past and there are chances of entity doing the same in the future. See, now let's understand both of these examples one by one, because I'm not sure as to why there is a confusion on this, but if let's suppose there is a confusion, it's important that we discuss. See, there are two examples that we have picked up. Let me just talk about example number 6 first. Okay. In example 6, if you look at AB Limited, there's a litigation which is going. Yeah. So what is the outcome of the litigation? Either AB Limited will win or lose. Correct. Today, can AB Limited say with surety that they are going to win or lose? No. So in the given example, that clarity is not there. Yeah. So is it not possible for the entity to estimate? Of course, it's possible. In some of the cases, entities may know that they are going to win. In some of the cases, entities may know they are going to lose. But over here, clarity is not there. Okay. So now, when do we recognize a provision? When it is probable. Means it's more likely that AB Limited will lose. Why? Because then it becomes more likely that there will be an outflow of resources. Do we have that situation in this example? Looking at the facts which are given in the question, that situation is not there. Okay, I'm just only talking about this scenario on the basis of the fact pattern which is available in the question. So what do you find? One, probability around outflow of resources. Do we have that? Probability around outflow of resources, do we have that? No. But do we have a possibility? Okay, if let's suppose probability is not there, do we have a possibility? Yes, possibility is there. Why? Because as of now, if you look at the fact pattern which is given in the question, it's 50-50. Yes or no? It's 50-50. Entity may win, entity may lose. It's 50-50. Correct? So we can say possibility is there. So therefore, what will this entity do? If the probability is there, entity will recognize a provision. which seems to be not there. But if the possibility is there, entity will not recognize a provision. Entity will give a disclosure. That's what you call as a contingent liability. Correct? Now, this is what you do in example number 6. Now, hoping you're clear on this, but anyways, our idea was not to get the clarity on this. Our idea was actually to get the comparison of both these situations. Now we will look at the other situation, the one that we have in example 5, because that is where most of the confusion lies. Now in this example, we have this company Cal Limited. Okay. And it may have an outflow of resources. What is that? Replacement of laptop. So how will this outflow happen? Laptop may have to be replaced. Now in this case, the same question we need to ask the company. Today, as regards this outflow, is there any probability? Is it probable? See, litigation is not going on over here, right? So we can't say that the company will win or company will lose. If let's suppose the customer will come for the replacement of laptop, so will the customer file a case? Will the company file a case? No. Company will simply accept it. Replace the laptop. We are not told in the question that the company will get into a litigation. Okay, so that's why we are not talking about a litigation. But litigation is not something that's the criteria for us to assess. Okay, litigation is not the criteria. What is the criteria? We need to find out whether the outflow is probable, means whether there are greater chances that there will be an outflow of resources. Now there's a point given in the question. It says a few laptops during the past years have been replaced by Cal Limited. So if you look at the chances, that what are the chances that actually there will be some problem in the laptop, and therefore customers will come to the company for the replacement. So it seems to be there. Why? Because in the past years, because if you look at the financial year, so let's suppose we have this financial year 24-25. When are the customers expected to come? In the future years. But the question is, in the past years, we have seen this happening. So if something has been happening in the past and the company has been replacing the laptop, so does it create a situation which has higher chances of occurrence or not? Answer is yes. So it's a good chance. So we are not saying that all the laptops will go bad. Okay, all the laptops will require some repair work. No. At least some will be there. Let's suppose out of 100, 5 may have problem. Yeah. So we are not talking about all anyways. We are talking about only those 5. Yes or no? So if it is expected and that expectation has higher chances, what will happen? It will become probable. And the moment you say probable, what do you require? What do you require? Provision. Yes or no? The moment you say probable, what will you require? Provision. Clear? Yeah. So in this example, contingent liability will not be given. See, contingent liability is something which is contingent upon occurrence of some future event. So there's no contingency which is attached over here. Correct? There is no contingency which is attached. Clear? Okay, I understand Radhesham has a query. Yes, Radhesham, please go ahead. Please pick up. Please explain your query. I understand Meenu, Navneet, they are clear. Yes, Radhesham, please pick up. Quickly, please raise hand. Please pick up fast. Please explain your query. Yes, please go ahead. Yes, over to you quickly. Yes, Radhesham, please pick up fast. Nisarg, if you can unmute Radhesham.
Sir,
Yes, Radhesham.
sir, I understood this Cal Limited, they will recognize as
Your
provision.
voice is very low. You need to speak a bit louder, please.
Am I clear, sir, now?
Little better. Yes, please go ahead.
Okay, sir, sir, I am clear on this example number 5 that Cal Limited will recognize it as provision. But my question is that mostly when we record a provision, it is short term.
It is?
Short term.
What do you mean by short term?
So means provisions are payable within 1 year mostly.
No, what makes you say that? So how can you say provision will always be a short term or mostly short term? What is the basis of saying that?
So here in example also it is payable within 1 year. Like if the laptop has to be replaced, it is to be replaced within 1 year. Means they will
Correct.
get.
But that is dependent on the fact pattern which is made available to you. You can't say mostly. So maybe you have come across mostly those questions wherein the outflow was required within the next 12 months from the balance sheet date. But to say that the provision will always be short term or mostly short term will be wrong. It will be dependent on the fact pattern which is there, dependent on the situation. If let's suppose the question says this replacement can be done up to next 2 years,
Yes,
then
sir.
what will happen? Some part will go to short term, some part will go to long term. What if the company estimates that none of the laptop will come in next 1 year? Entire amount will go to long term.
Okay.
Okay. Every time you do some assessment, please remember that has to be based on the question or the fact pattern which is made available to you. Don't get in to the solution with some pre-assumptions. If
Okay.
you do that, that is where the chances of making the mistake will automatically increase. Why? Because you are doing something which is not there in the question or which the question is not telling you. Yeah, you are changing the facts in a way or you are pre-assuming something which may
Okay.
not be in line with the requirement of the question.
Yes, sir.
Yes,
Yes, sir. Thank you.
sure. Okay, anyone else? Any more questions on this? Quickly. Any more questions on this? Any more doubts if you have? Vikas, please explain your query. See, I would appreciate the moment your query better you speak up, because you can explain your query. Otherwise, I may not be able to understand your complete query. Yes, quickly, Vikas, if you can speak up. Yes, Vikas, please go ahead. Please pick up fast. Waiting for you. Anyone else? Any more questions? Vikas, are you explaining? Please raise hand so that okay, Vikas says mic doesn't work. Okay, so then I would appreciate if you can just explain your query. What is your query? Please elaborate on this. So briefly, I can understand, but I'm not clear on the detailed aspect. So let me just read this query. So he's asking if the percentage was given for the past, then what should we do? So again, I'm not clear on this as to what do you mean by that? What do you mean by percentage given for the past? Means in relation to what past? In relation to how many customers will come, in relation to what has happened in the past, how many claims. Okay, I'm not clear, but if let's suppose you are talking about the percentage given for the past, means in the past 5% customers turn up, then that will become the basis for your measurement. Okay, for the amount to be recognized. Over here we are not discussing about measurement. Over here we are discussing about recognition. Okay, so we are discussing whether to recognize or not. I think that information will not help you on recognition. That will help you on measurement to determine the amount. Means will you record it as 100 or maybe 5? Okay, yeah. So in a very limited manner, because this is what I could understand. Hopefully you are clear on this. Then I think Shraddha has a query. Yes, Shraddha, please pick up. Please explain your query. Shraddha, please pick up fast. Please explain your query. Yes, Shraddha, please pick up. Please explain. No further questions? Okay, so let's move further. Okay, so then I think Harivansh has a query. Yes, Harivansh, please go ahead. So again, I'm not clear. What are you asking? When are the provisions created? Current year, next year? Now, what do you mean by this? We are talking about the reporting year only. Harivansh, can you please explain this? See, we are talking about the reporting year. So every time when we discuss the accounting, for what period do we discuss the accounting? It has to be for the reporting year. Yeah. Do we discuss the accounting to be done for the next year? No, we discuss the books of accounts to be maintained, accounting entry to be passed, financial statements to be prepared for the current year, for the reporting year only. Yes or no? So the same thing applies to everything that you will cover. Correct? But if let's suppose your query is something else, please explain. Yeah, please pick up. Yeah, clear? Harivansh, clear on this? Clear? All right. So now what we can do is we can pick up one more example. Hopefully, I'm just hoping you would be clearer on this, so let's look at one more example. XYZ. Okay, so this is the example we are looking at, right? XYZ is in mining business. So that's the nature of the business of the company. It is operating in a country where XYZ is legally bound to clean and restore the environment on expiry of license after 10 years. Okay. XYZ can reliably estimate the amount required to restore the environment caused by the mining business. So it seems there's some damage to the environment which needs to be restored. Since it is a present obligation which cannot be avoided. So number one, do we have an obligation which is unavoidable? Yes. Resulting from past events? Yes. The moment we say that, what do we have? Probability that there will be an outflow of resources. Okay. So that's when, what do? Provision you will recognize? Yes or no? That's when you will recognize the provision. Correct? Correct? Clear? Yeah. Create a provision. So I think it's a similar sort of example. The only difference being some fact pattern is changed. So now if you go back to the example that we discussed, if you remember, there was an example on lease of a building. Yeah, remember this example? Lease of a building, wherein some outflow has to take place after 10 years. Yeah. So now we have a similar sort of situation. See, when it comes to the mining business, so what will happen? When the mining will be done, some damage will be done to the environment. So what are the norms? Generally, these are the norms of the government, that this damage which you are causing, you need to restore that. Okay. So now, if let's suppose some sort of excavation, etc., are going on. So today, what has happened? Some damage is done. So when do you accrue it? You accrue this today. So if you accrue that today, when do you need to recognize it? Today itself. Okay. And is it probable? Answer is yes. So that's why, what do you recognize? You recognize a provision. You recognize a provision. Okay. Yeah. So this is something similar to what we discussed in case of restoration. Sorry, that building example. Correct? Clear on this? Any questions? Any doubts? Okay. Nagaraja has a query. I think Neeraj is clear. Nagaraja says provision is a liability which can be measured only by using. Yes. So that's what you have. But I couldn't understand the question. So are you trying to explain this, or was this a question? But anyways, I'm just hoping you are clear on this, right? Yeah, everyone clear? Right? Everyone clear? Okay, good. So now what we will do is, we will quickly get on to the requirements of a contingent liability. Okay, and let me just also take you to the PPR analysis. Now this is important. This PPR analysis, if you remember, we discussed this in the last session. Probable is something over which we have discussed quite a lot with the help of some examples today. Possible is again something which we have discussed. And of course, third is the situation which is a remote. Okay, where we will not be doing anything as far as any recording is required to be. So we'll not be doing that. Okay, so now every time when we are required to assess as to whether to record a provision or to disclose a contingent liability, sometimes you may also look at the words which are mentioned. Okay, some wordings may also help you on that. So it's not necessary some of these words may be used in the question. But if let's suppose you come across such questions, so that can help you to a great extent. So just try to, okay, maybe, of course, draw inferences, but at the same time, just remember some of these wordings. What will probable mean? Higher chances. The moment you say there is a probability, or the question says, if let's suppose, can we have a contingent liability then? No. Then we'll have a provision always. But if let's suppose the question talks about possible, or the wordings are possible obligation. So in such a case, can we, in such a case, can we then record a provision? No, only a contingent liability will be required, right? I understand there's a query from Radhesham. Radhesham, please explain what's the query. Can we say that we record the provision as such? Again, see, because you write very few words, so that's why it's very difficult to understand. Again, I'm not clear as to, what is it that you are trying to ask. If you can just speak up, that will be better. Okay, so now we'll look at this contingent liability, right? We'll try to understand some of the aspects around it. See, contingent liability is not recognized. It is only disclosed. That's one. Further, contingent liability will be disclosed unless possibility of outflow of resources is remote. What does it mean? See, the disclosure is required until unless we say that this possibility is remote. Why? Because the moment you say possibility is remote, what does it mean? It's a remote chance. So actually that possibility is not there. Yes or no? That possibility is not there. Where an enterprise is jointly and severally liable for an obligation, part of the obligation that is expected to be met by other parties is treated as a contingent liability. The enterprise recognizes a provision for the part of the obligation for which outflow of resources is probable. Okay, except in the extremely rare circumstances. Now, please remember, even though the standard says you don't recognize it where no reliable estimate can be made. But let's think about it practically. Okay. Do you think it is practically possible for a company to justify that a reliable estimate is not possible? Company can use a lot of estimation techniques. Yeah. But to say that they cannot reliably estimate, that is very rare. Okay. So this cannot become a reason. Generally, you will not find this to be a reason. This appears to be more of theoretical rather than practical. Okay. Contingent liabilities may develop in a way not initially expected. Therefore, they are assessed continually to determine whether an outflow of resources embodying the economic benefits has become probable. If it becomes probable, okay, then what do? Tell me. Then you will move on to the provision. Right? Yeah. So that's why I'm saying whenever you look at the question, one of course is the assessment you will do, but please also go by the words. The moment you will see a probability, you will forget about contingent liability. Right? Now, if you look at this example, this appears to be a case of a litigation. A customer of XYZ has filed a case against them for providing them wrong product and not returning the same. And what XYZ has done is XYZ has taken legal advice from their lawyer, who believes it is not probable yet that resources may be required to settle the same. Okay. So now, this has been called as a decision tree. So what do you mean by decision tree? See, on the basis of different situations, you will assess whether a provision is recognized, disclosure is required, or you don't do anything. So actually this flowchart is what? This is nothing but that PPR analysis. Okay. So over here, that PPR analysis is given to us in the form of flowchart. So if you want, you can just refer this flowchart and this will help you a good, so this can be a helpful thing in terms of your understanding of that PPR analysis. So I'll also quickly flip through this, but it can be a reference point for you. Correct? Clear? So let's look at this quickly and then we'll take a break, right? Now, as regards this PPR, let's talk about it. Present obligation as a result of a past event. Okay. Past obligating event, of course. If we say yes, then we need to find out whether the outflow will be probable. If yes, then we will check, okay, can you reliably estimate, which we discussed. Okay, generally the company will be able to do that. But theoretically, we need to find out. If you say yes, then what do? Create a provision. Create a provision. Provide means create a provision. If let's suppose there is no present obligation, so we need to find out, do we have a possible obligation? If we say yes, then is the outflow probable? See, the probability should not be there. Okay. Then we need to check, is it remote? Again, the moment you say remote, where do you go? You'll do nothing. But if we say no, it's not remote, it's possible only, then what do? Disclose a contingent liability, right? And in case it is remote, in terms of the outflow, which is going to move out, or in terms of the assessment of the obligation. So what do? You will not be doing anything. Clear on this? Yeah, everyone clear? So any questions, any doubts that you may have, we can discuss that. Otherwise, we can take a break now, and of course, some part to it which we'll discuss after the break. Huh? Okay, Shamli, Harivansh, they are clear on this. All right, good. So then I think we can take a break. Yeah. Okay, Nisarg, we can take a break now. Okay, so let's move forward. Okay, so far, some of these things we have talked about, they were in relation to the recognition. Now, when we recognize, let's suppose, so what do we need? We need the amount to be determined. Now, that is where the standard requires that the amount that you recognize as a provision should be the best estimate of the expenditure. So what does it mean? Estimation technique is required to be followed. And that is, I think, implied also. Why? Because the moment we talk about a provision, uncertainty is involved. So that's why we can't say with certainty as to what is the amount involved. So that's why what do you need? Estimation, right? So what are the factors that will determine this estimation? Judgment of the management of the entity. So that's one. Experience of similar transactions in the past. And if required, assistance from experts, third party experts, who can help the company in terms of estimating the amount. Right? Now, when it comes to any future value, so what do? You will do the present valuation. Okay. Now, what about these risks and uncertainties? We have discussed that because the uncertainty is involved, so that's why there's a risk. Now, these are required to be considered when the entity will be estimating the amount. So they need to consider some of these factors. Only then they will be getting into that assessment. Future events. Now, what is the role of these future events? It is only those obligations arising from past events that exist independently of entities' future actions. Now, future events that may affect the amount required to settle an obligation should be reflected in the amount of provision. Okay, for example, let's understand that. An entity may believe that the cost of cleaning up a site at the end of its life will be reduced by future changes in technology. In this case, the amount that we recognize reflects a reasonable expectation of technically qualified, objective observers taking account of all available evidence as to the technology that will be available at the time of cleanup. Therefore, it is appropriate to include, for example, expected cost reductions which are associated with increased experience in applying the existing technology, or expected cost of applying the existing technology to a larger or more complex cleanup operation that has previously been carried out. However, an entity does not anticipate development of a completely new technology for cleaning up. Yeah. So some of these future events are also required to be considered, but when you consider these future events for the purposes of estimation of the amount, what do we need? We need sufficient objective evidence. So we should not be thinking that in future something will come up because of which, let's suppose if I am estimating an amount of 10 lakh, it will go down to 2 lakhs. No. Till the time you do not have the evidence of that, okay, you can't justify that. There has to be some logical assumptions for you to assume. You will not consider that, right? Then any effect of possible new legislation is also taken into consideration in measuring an existing obligation. When sufficient objective evidence exists that the legislation is virtually certain to be enacted. Okay. The variety of circumstances that arise in practice usually makes it impossible to specify a single event that will provide sufficient objective evidence. Right? So some of these factors you will consider. Now, moving further, reimbursements. Now, what do you mean by reimbursement and what is the accounting treatment for a reimbursement? Let's look at this. If let's suppose there is any reimbursement. Now, what is a reimbursement? Let's suppose an expense is incurred and you get this reimbursed from another party. So what do? You will recognize it. Okay. Now, what will become the basis for you to recognize it? So let's look at this table. Entity has no obligation for the part of expenditure to be reimbursed by other party. The obligation for the amount expected to be reimbursed remains with the entity, and it is virtually certain that reimbursement will be received if the entity settles the provision. Third, obligation for the amount to be reimbursed remains with the entity, and reimbursement is not virtually certain if the entity settles the provision. So in each of these cases, what do? In the first situation, entity has no liability for the amount to be reimbursed. So in that case, do you do anything? No, you don't do anything about it. Next, reimbursement is recognized as a separate asset in the balance sheet and may be offset against the expense. Okay, and this reimbursement is disclosed together with the amount recognized for the reimbursement. Third, expected reimbursement is not recognized as an asset, but that expected reimbursement is what you disclose. Okay, yeah. So this is what you need to do in case of reimbursement. Now, when it comes to the provisions, now all of these provisions are what? They are nothing but estimates. And with the estimates, what do we understand? They are required to be reassessed. They are required to be reviewed at each balance sheet date. Okay. And if let's suppose there's any change in estimate, can you tell me what is the accounting treatment you will follow for that? If there is a change in estimate, what do? Anyone? Any thoughts? If there is a change in estimate, what do? How do you record it? Tell me quickly, if there is a change in estimate, what do you do? How do you record it? Quickly, over to you. What will become the basis for you to record that? That is required to be recorded prospectively. Okay, means you will not go back to history, right? You will not go back to history. You will change the date from which the revision is done. Okay, Anil says we'll have to review the earlier figures. See, you'll have to review the earlier figures, but you will not change the earlier figures which have already been recognized. You will only change it prospectively. Prospectively means the day when the revision is done. Clear? This is called as prospective accounting. Okay, clear? Now, let's move on to the next concept, that is about future operating losses. See, when it comes to future operating losses, they do not meet the definition of a liability. Therefore, provision should not be recognized for future operating losses. As simple as that, right? Then there is a concept called as restructuring. Now, what do you mean by this restructuring? And what do you need to do whenever there is a restructuring in place? So let's understand this with the help of an example. Say the company is planning a restructuring. Say for example, company has got 3 plants, P1, P2, and say P3. Okay, company has got 3 plants, right? Now what the company has done is, say company is planning to discontinue this. Okay, so you can say closure of a business location or sale or termination of a line of business. Now, when they will do this, some costs will arise due to this restructuring, or some costs may arise due to this restructuring. Similarly, if let's suppose there's a change in the management structure. Okay, let's suppose maybe some of the senior employees have been retrenched. Okay, so now what do you do in that case? What do you do with those costs of restructuring? So the standard says a provision for these costs needs to be recognized. Yeah, but when do you do that? When the criteria for provision is met. And what is the criteria? There has to be a probability in terms of outflow of resources. The moment we say there is a probability, that needs to be recognized. Okay, so let's look at some of these examples now. Sale or termination of a line of business, closure of business location in a country or region, or the relocation of business activities from, say, one particular location to another location. Changes in the management structure, fundamental reorganizations, which may impact the nature and focus of the operations of the entity. Now, this provision for restructuring cost is recognized when the criteria for provision will be met. Okay, clear? A restructuring provision should include only the direct expenditure arising from restructuring. Okay, which are necessarily entailed by restructuring, not associated with ongoing activities. And this does not include retraining or relocating continuing staff, marketing cost, or investment in new systems and distribution costs, because these are treated in a different manner. Or you can say these will not be called as restructuring costs. Right? Clear on this? No. As around disclosures, of course, there are some disclosure requirements and there are a few questions that we need to discuss. But before that, what we will do is, there's one more concept we can just quickly look at. This is what you call as contingent assets. Okay. Now, what is a contingent asset and what do you do about this contingent asset? Let's try to understand this. Now, contingent asset, you can say, is somewhat similar to what we discussed in case of contingent liability. So what is a contingent liability? Wherein the outflow is not certain, wherein the outflow is not probable. It is possible, number one. Number two, when we talk about this outflow, it is contingent upon occurrence of some future event. But in that case, we were talking about an obligation. Okay, in case of a contingent liability, we were talking about an obligation. Now what we are discussing is an asset, or you can say some sort of benefit which is going to arise to the entity. All right. Now, If you look at contingent assets or some of these situations, these are rare. Okay, practically I've never seen. Contingent assets usually arise from unplanned or other unexpected events. An example is a claim that an entity is pursuing through legal processes where the outcome is uncertain. So if let's suppose the entity wins the case, company will get the claim. If the entity is virtually certain it will win, it will get, so it can recognize. But over here, certainty is not there. So that's why what do? They will disclose a contingent asset. They can't recognize a contingent. See, similar to a contingent liability, it is not recognized. It is only disclosed. It is only disclosed. Further, please remember, it is not disclosed in the financial statements in the notes to accounts. No. Contingent liability you will disclose in the financial statements, but this contingent asset is disclosed in the board report. You can say the report of approving authority. See, for a company, this will be the director's report. And if let's suppose the entity is something else other than company, then of course you'll have to go by the report of the approving authority. Right? As we discussed that these of the things, some of these things, sorry, you will find this rare. Kuldeep, I'm not sure about it. As to what is your query? I would request you to please look into it. Okay, so now what we can do is we can just move on to some questions. Okay, yeah. So let's question. Let's look at this one. Exos Limited is in the process of finalizing its accounts for the year ended 31st March X2. So that's the year. Company seeks your advice on the following. So there are two situations. We'll discuss both of them one by one. So let's look at the first one. Company's tax assessment for the assessment year X1, X2 has been completed on 14th February X4. Okay, with a demand of 2.76 crore. What does it mean? Company has sort of, so there's a demand which has been formed up. Means this demand is something which will be paid by the company. Company paid the entire due under protest without prejudice to its right of appeal. So when the company got into the litigation, so therein the company has already paid the demand. Okay, now you may be thinking, but sir, why the amount was paid? So that is the legal norm. So when you get into the litigation, you are required to pay this. If you win, you get the money back. Otherwise, it is adjusted. Company files its appeal before the appellate authority, wherein the grounds of appeal cover tax on additions made in the assessment order for a sum of 2.10 crore. In this case, what do you think? How should this be dealt by the company? Over to you. How should this be dealt by the company? Quickly, how should this be dealt? How should this be recorded by the company in the books of accounts? Theosumi says loans advances. What does it mean? See, I would appreciate if you can just elaborate. How would this be recorded by the company? Quickly, everyone, how should this be recorded? Chamli says 0.66 crore, which is already paid, means a liability. 2.10 is shown as contingent liability because of possible obligation. Neeraj says deferred tax liability. Okay. What about others? Anil has a query. Yes, Anil, please go ahead. Please pick up. What about others? What about others? Quickly, huh? What do you think? What do you do? How should this be treated? What will be the accounting treatment in this case? Tell me quickly. Anyone else? No? So let's look at this. Okay, so let's look at this. Now we have a situation wherein, say for example, assessment year was X1, X2. Okay, so in X1, X2, I'm assuming company has paid a demand. What is that? 2.76 crore. Okay, so this is when the company would have paid this. Then would have X2, X3. Then there will be X3, X4. Right? So I think sometime over here, company has received a demand. So now what is the reporting year? This is the reporting year. So we are talking about X3, X4. So what do you do in X3, X4? Yes or no? No. In X3, X4, company has received a demand of 2.76. Or you can say this demand has got finalized in a way, because company has lost the case. Okay. Can the company go to higher level? Yes, that is what the company has done. Company files its appeal before the appellate authority. So company has gone on to the next level. Now, for us to consider this accounting, what do we need? We need to go back to X1, X2 and understand how this 2.76 would have been recorded. So the company, when it pays this amount 2.76 crore in X1, X2, company was fighting the case. So definitely the company would not have recorded this as an expense. Yes or no? So will the company pay this amount and record an expense for this? No. Why? Because the company would have believed that they will win. Or maybe it will be decided later on. So when the company would have paid, this would have been recognized as advance. Yes or no? So this is what the company would have done or should have done in X1, X2. So that means 2.76 crore must be appearing as an asset in the books of the company. Yes or no? Yes or no? Yeah. So this must have been appearing as an asset in the books of the company. Correct? So I'm not talking about X3, X4. I'm talking about the previous years. Correct? Now, this asset will be carried forward to the next year. This asset will also be carried forward to the current year. means the reporting year. Now comes the question that do we continue to recognize this as an asset or we do something different? Now, in this case, see, as regards this loan and advance of 2.76 crore, what has happened? There are two parts to it. One part is 0.66 crore and the other part is 2.10 crore. Why are we looking at these two parts? Because that's what the question says. See, in this case, what did the company do? Company files, so if you read the last sentence, company files its appeal before the appellate authority, wherein the grounds of appeal cover tax on additions made in the assessment order for a sum of 2.10 crore. So when the company has gone to the higher level, they are not contesting for entire 2.76 crore. No. It seems out of 2.76 crore, company has accepted the demand for 0.66 crore, which means for this 0.66 crore, can the company continue to recognize this as an asset? No. Company will have to therefore record this as an expense. Okay. Through a provision. Okay, so this part moves from asset to an expense or a provision. Yeah, but as regards this 2.10, this will continue to be appearing as a loan and advance. One. Okay, further, because the company has already lost a case, so we don't know whether the company will win this or lose. See, if we are sure company will lose, then the provision should also be made against 2.10, but we don't know about it. So that's why what should we do? Disclose a contingent liability in respect of 2.10. Yes or no? Yeah. So that's why as against 2.10, this will continue to be appearing as asset. Okay. And corresponding to this, a contingent liability will be disclosed. And as against 0.66, what do we do? This will be moved from asset to an expense to a provision. Clear? Everyone clear on this? Any questions, any doubts if you have on this? Quickly, everyone clear? Quickly, over to you. Shraddha is clear. What about others? Any questions on this? Kuldeep is asking every year we need to transfer to expense. Why are you thinking every year? We are not doing it every year. We are not doing it every year. Okay, so we'll have to go by the fact pattern. Right? Harsh is clear, Prerna is clear. Harivan says 2.10, please explain again. See, 2.10 is the portion out of 2.76 which has been contested by the company. Okay. So that's why, what will you do with that? will you record it as an expense? No. So in a way, we can say it will continue to be treated the way it was done earlier. So earlier, what the company would have done is, company would have recognized 2.76 as an advance, as an asset, and corresponding to this 2.76, company would have shown a contingent liability. So this is what the company would have done in the past years. Now, what are we saying? Out of this 2.76, move 0.66 to expense. So remaining amount will continue to remain under asset and contingent liability. That's it. Okay, so you can just simply say that the old treatment will continue. Yeah, will continue with the same thing, except a part of that. Why? Because that part is accepted by the company as a demand. Means company recognizes that yes, it's an expense. So that's why record it as an expense. So that's why don't call it as an asset. Okay, clear? Clear? Everyone clear? All right, so now let's look at one more example. The other part to this. Now, in this case, second part, company has entered into a wage agreement in May X2. Okay, and we are talking about X1, X2, whereby the labor union has accepted a revision in wage from June X1. The agreement provided that hike till May X2 will not be paid to the employees, but will be settled to them at the time of retirement. Company agrees to deposit the arrears in government bonds by September X2. So in this case, what do you think? What is required to be done? Tell me quickly. Let me just, I think, put it down in the form of a chart to get some more clarity. So if you look at this example, so what do we have? Company has entered into a wage agreement. Okay, so say this is March X2. So this is May X2, right? So in May, a revision in the wages has been accepted. Starting from which date? June X1. The agreement provided that hike till May X2 will not be paid to the employees. So there will be a hike from June X1 to May X2. So there will be a hike which they have agreed, right? But it will not be paid to the employees. Now, what will happen to that? It will be paid when the employees retire. Let's suppose employees retire over here at different points of time in future. Okay, but what the company is saying is, okay, so I'll not be making the payment to the employees in respect of this hike. But whatever is the amount of hike, actually it's an arrear because it's for the past periods. So that's why what the company will do is company will deposit it in the government bonds. So company will deposit in government bonds. So if you remember, we talked about defined benefit plans, wherein the company will have an obligation for the post-employment benefit and will also have an asset. So it appears to be similar such case. Now in this case, question arises, how do you record it? What will be the accounting treatment for the reporting year? Very good. Neeraj says, appears to be a case similar to AS50. Very good. Minu says, yes, it's similar to that. Anil says it's a liability, kind of, yes. But how will you record it? Great. Minu says create a provision. See, in this case, what is the relevant year for us? For us, the relevant period is this. So the liability for this period, say X. Okay. That's what you will record. Why? Because it's all firmed up. So if the liability is firmed up, so this is what you will record. Correct? Yeah. Okay. All right. Clear on this? So for this amount, for this period, provision will be required. Clear? Everyone clear on this? Any questions, any doubts if you have? Yeah, clear? Okay, so let's look at one more example. See, if you understand this concept, then of course the questions over here, you will find those to be very, very easy. Yeah? And that's the good part about this standard. Huh? Okay, so let's look at this example now. At the end of financial year ending on 31st December X1. So we have a calendar year here. Okay. A company finds that there are 20 lawsuits outstanding. You can say litigations, which have not been settled till the date of approval of accounts by the board of directors. The possible outcome as estimated by the board is as follows. So what is that? In respect of 5 cases, there is 100% probability of company winning. Next 10 cases, 50% chances are company will win. 40% chances are company lose when the amount involved will be 1,20,000. 10% chances are company will lose. Okay, so when company lose, so 2 lakh is the amount involved here. For the remaining 5 cases, 50% chances are company win. 30% chances are company lose, amount is 1 lakh. 20% chances are company lose, amount is 2,10,000. Outcome of each case is to be taken as a separate entity. Ascertain the amount of contingent loss and the accounting treatment. So let's look at this. In this case, probability of winning of first 5 cases is 100%, and hence, do we provide any sort of loss on that? No. So that is gone. That is out of the picture. Probability of winning next 10 cases is 50%. Yes or no? Yeah. For the next 10 cases is 50%. And for remaining 5 cases is again 50%. So we make a provision if the loss is probable. As the loss does not appear to be probable and possibility is remote, therefore disclosure by way of note should be given. So therefore in this case, what do you do? A contingent liability will be required. Why? Because it's 50-50. Yes or no? So for the next 10 cases, what will the amount of contingent liability? 40% of 1,20,000 plus 10% of 2,10,000. For the remaining 5 cases, 30% of 1 lakh plus 20% of 2,10,000. Okay. So therefore, what do you do? This entire amount pertains to each case. So this amount that we have computed is for each case. So how many cases do we have? 10 cases. So the amount of liability will be 68,000 into 10. How many cases do we have for this? 5. So amount of liability will be 72,000 into 5. So all in all, what is the total amount of contingent liability that you disclose? 10,40,000. 10,40,000. So that's what you will disclose. See, in this case, the important part, I would say, and which can be a sort of confusion. Question says ascertain the amount of contingent loss. In fact, if you look at the question itself, it has used the word contingent. Yes or no? So I would say in a way the question is trying to help you by saying that provision will not be there. Yes or no? Provision will not be there. It will be a contingent liability only. Correct? Yeah? All right. Any questions, any doubts that you have? Quickly. Over to you. Then we'll pick up some more questions. Huh? I think Anil, you raised hand. You have a query? Anil, you raised hand. Quickly, please let me know if there is any query. No? All right, so let's look at some more examples. Huh? Okay, so let's look at this example. Okay, Pooja has a query. Yes, Pooja, please go ahead. Please pick up. Pooja, you have raised hand. Please pick up. Yes, Pooja. I think you have a query. No? Sure. So do we move? All right, so let's look at this example. Okay. After a wedding in 2014-15, so it's a financial year we are discussing, 10 people died, possibly as a result of food poisoning from the products sold by the entity. Legal proceedings are started seeking damages from the entity, but it disputes liability. Okay, so we are looking at it from the perspective of entity, that people are claiming damages from the entity, but the entity is saying, no, I don't accept it. So that's why there is a disputed liability. So you can say it's a sort of litigation which is going on. Correct. Up to the date of approval of financial statements for the year ended 31st March 2015, entities lawyers advise that it is probable entity will not be found liable. Okay. However, when the entity prepares the financial statements for next year, see, there are 2 years, 2014-15, and then we have 2015-16. However, when the entity prepares the financial statements for 15-16, its lawyers advise that owing to the developments in the case, it is probable that the entity will be found liable. Okay, so over here we can say, what was the probability? No liability. And over here, now their assessment has changed. Now they are saying that what's the probability? Liability will be there. So now, in respect of these 2 financial years, what do you think will be the accounting treatment? Over to you. What should be the accounting treatment for both the years? Huh? Great. I can see this response from Nagaraja. Nagaraja says this question answer 2014-15 no provision, disclose contingent liability. 15-16 recognize provision. Very good. Radheshyam says the same thing. Very good. Adil has the same point. Yeah. So it appears you're clear on this. Yeah. So now in 14-15, what do you do? Because it's not probable. So disclose a contingent liability. But next year, the facts, circumstances have changed. So that's why what do you do? Next year, provision you will recognize. Okay. Clear? Right? So let's look at one more example. A manufacturer gives warranties at the time of sale to purchasers of its product. Under the terms of the contract for sale, manufacturer undertakes to make good by repair or replacement manufacturing defects that become apparent within the 3 years from the date of sale. On the basis of past experience, it is probable that there will be some claims under the warranties. Okay, so in this case, how do you record it? Over to you. What will be the accounting treatment? How do you record it? Tell me quickly. What will be the accounting treatment? Very good. Shamli says create a provision. Anil says create a provision. Right? So I think it's straightforward. So we have a present obligation as a result of past obligating event, which will require outflow of resources. So that's why what do you do? Provision is required based on best estimate. Correct? Yeah. Simple, straightforward, right? Okay, so let's look at one more example. Government introduces number of changes to the income tax system. As a result of these changes, entity in the financial services sector. So this entity is in the financial services sector. Okay. Will need to retain a large proportion of its administrative and sales workforce in order to ensure continued compliance with financial services regulation. Now, in this case, what is the understanding? There are some changes, maybe some regulatory changes are there. Now, because of those changes, what will happen? Because the company, because of the nature of business that it will have, it will require to train. Retrain means already trained staff will now be required another training. Why? So that they can also comply with these new norms. Okay. Effectively, they can carry out their work. Yeah. So that's the understanding. If you look at the balance sheet date, say the balance sheet date is 31st March 2025. Up to the balance sheet date, no retraining has taken place. So that will be required, but that has not taken place as yet. So now what do you do? In respect of this reporting year, what do you do? Tell me. In respect of this reporting year, what do you do? Tell me quickly. What do you do? Nagaraja says no provision. Anil says create a liability. Shamli says no. No. See, in this case, there is no obligation. Why? Because training has not taken place. Training has, see, that has to take place in future. Yeah. So therefore, do you recognize a provision for 24-25? No. So when do you recognize it? As in when the training will happen. Clear? Everyone clear? Yeah? Clear on this? Yeah? Great. Good. Shamli, I think Adil, everyone is clear. All right. So with this, we are through on this topic as well, AS29. And I think in the next session, you'll be starting with a new topic. All right. So with this, we can just conclude our discussion. Okay. So thanks everyone for your time today and for this wonderful participation. Thanks so much. Nisar, we can close this.